Okay, so if you've spent, I don't know, any time at all online recently, you've seen it, right? The promise of financial freedom through trading. It's everywhere, and it's an incredibly powerful idea. But what's really going on behind the curtain? Let's peel back those layers and separate the life-changing potential from the account-destroying myths.
I mean, it is everywhere, isn't it? The glossy screenshots showing these massive green numbers, the luxury cars, the whole dream lifestyle. It all builds this seductive myth that trading is some kind of easy path to getting rich and fast. But here's the thing. That's just the highlight reel. What is the real price of a winning trade? And I'm not just talking about the money you risk. I'm talking about the effort, the discipline, and the absolute emotional steel it takes to achieve any kind of lasting success in this game. And look, in today's volatile markets, that gap between the myth and the reality, it's not a gap. It's a canyon. So let's get real. Let's build a foundation for what actually works. And we're going to start with 3 core pillars. This is it. This is the first and honestly the most important rule of them all. This is the one that separates the pros from the 90% of people who fail. See, the best traders, they aren't obsessed with making money. They are absolutely obsessed with not losing it. Protecting your capital isn't just a strategy. It's everything. Just look at this. This is the brutal, unforgiving math that most people just never, ever consider. Imagine you start with, say, $10,000, and you lose half of it, okay? You're down to $5,000. Now, to get back to where you started, back to that 10 grand, a 50% gain isn't going to cut it. Nope, you need to literally double your money.
That's right, a 100% gain. All of that work, all of that risk, just to erase a 50% loss. This simple, unforgiving math is exactly what blows up most new trading accounts. It's a killer.
You can think about it like this. The climb back up is twice as steep as the fall was. And that is exactly why risk management is completely non-negotiable. Your first job isn't to be a hero and hit home runs. It's just to make sure you can show up and play again tomorrow. So, how do the pros actually build this defense? Well, they use a practical framework. First up, position sizing. They almost never risk more than 1 or 2% of their total capital on a single trade. Second, they have strict stop-loss discipline. They decide their absolute exit point for a loss before they even get into the trade. Third, diversification, so they don't have all their eggs in one basket. And finally, drawdown limits. A hard stop on how much they're willing to lose in a week or a month before they just step back and reset. It's not glamorous, I know, but this is how you stay in the game.
All right, so once you've got your defense in place, the next battle, well, it's all internal. The market is really just a giant mirror, and all it does is reflect human fear and greed back at us. The greatest challenge isn't beating the market, it's mastering your own emotional responses.
You know, our brains are basically hardwired to make us terrible traders. It's a fact. We feel the pain of a loss about 2 to 3 times more intensely than the pleasure of an equal gain. This is called loss aversion, and it's the reason people hold on to losing trades just hoping they'll come back while they sell their winning trades way too early. The only antidote is to act like a robot. You need a rational, predefined plan, and you have to execute it without changing a thing, no matter what your emotions are screaming at you to do.
And the mental traps, believe me, they just keep coming. You've got confirmation bias, where you only look for news that confirms your trade idea. There's recency bias, which is thinking that because a stock went up yesterday, it just has to go up today. And then there's the most dangerous one of all, ego, when you tie your own self-worth to whether a trade is a winner or a loser. That is a guaranteed recipe for disaster. So that brings us to our third pillar. You have to realize that this is a never-ending journey. The market is a living, breathing thing. What worked 5 years ago might get you absolutely crushed today. The best traders are, without a doubt, the best students. So how do professionals actually learn? They have a system for it. They backtest a strategy on past data to see if it even could have worked. They zoom out, looking at weekly and monthly trends, not just the chaotic noise of the day. They understand how things are connected, like how what happens in the oil market can affect the stock market. They're constantly adapting because they know the game is always changing. And a huge part of learning is finding a style that actually fits your life. As you can see here, swing trading might work if you've got a full-time job. But day trading? That demands hours of intense focus every single day. Position trading requires incredible patience. The key takeaway is this: there is no single best way to trade. There's only the best way for you. Okay, so we have our 3 pillars:
Protect your capital, master your mind, and always be learning. But in the world we live in now, technology and social media have basically weaponized all those psychological traps, creating a whole new set of dangers you have to watch out for. Here's a quick checklist to protect yourself from so-called trading influencers. Be extremely skeptical of anyone promising consistent high returns. Ask for a verified third-party track record, not just pretty screenshots. If they're pressuring you to buy a course and they're focusing more on their Lamborghini than their actual trading process, just run the other way.
And this is the killer question. Just think about it for a second. If you had a system that genuinely printed money, would you sell access to it for a few $100? Or would you quietly use it to compound your own capital into a fortune? The answer to that question tells you everything you need to know about their real business model.
And all of this leads to the final and maybe the most important mindset shift of all. If you want any chance of success, you have to stop treating trading like a hobby or like a trip to the casino. You have to start treating it like a serious business.
I mean, a real business has a business plan, right? Well, that's your trading plan. A business tracks detailed metrics, not just profit and loss. It has a process for weekly and monthly reviews to see what's working and what's not, and it budgets for education and better tools. This is how you professionalize your entire approach.
And we need to be brutally honest about the odds here. Success is absolutely possible, but the numbers show that it is exceptionally rare. It requires that elite-level discipline we've been talking about this whole time, mastering your risk, mastering your mind, and mastering your process.
So what does real success even look like? Forget about turning $1,000 into $1 million overnight. For a top professional trader, a great year might be a 15 to 25% return. It's about the slow, methodical process of the tortoise, not the lottery ticket dreams of the hare.
So let's end on the most important truth of all. Forget about being perfect. Forget catching every big move. Your real job is just to manage your risk, control your emotions, and simply survive. Stay in the game long enough, and the right opportunities will find you. That is the real secret to trading.